Hello everyone and welcome to today's Stocks and Crypto YouTube Charts video. I am No FOMO Charts and today is Friday, March 28, 2025. Welcome everyone. This is a swing trading and investing stock charts, crypto charts YouTube channel. This week we do not have that many stock earnings releases. However, in 2 weeks, finance companies are set to report earnings beginning the second week of April 2025. Upcoming economic data. We have manufacturing PMI, job openings, non-farm employment change, unemployment claims, services PMI, average hourly earnings, non-farm employment change, unemployment rate, and Fed Chair Powell speaking. President Trump announced a 25% tariff on all imported vehicles and automobile parts. That's to start on April 2nd. Canadian Prime Minister Carney recently said the old relationship with the U.S. is over and vowed to engage in a renegotiation regarding trade agreements. President Trump spoke with Prime Minister Carney the next day to set up a meeting regarding politics, business, and everything else. The USA Core PCE Index, which is a very important inflation data, actually rose 0.4%. That was above the economist expectations of 0.3%. So the stock market sold off. Also, we had declining consumer sentiment and volatile politics and tariffs. So we had a sell-off in the market for the past couple days. Also, last week's data, inflation expectations increased, consumer sentiment decreased, bearish economic expectations and outlook for this year also increased due to tariffs, meaning we have a bearish expectation. And I saw some news articles saying that many CFOs are expecting possibly recession. April 2nd is quote unquote Liberation Day. It's a day that President Trump said he will impose more retaliatory tariffs on all US trade partners. So the stock market is not reacting well to that bearish sell-off. Stocks, S&P 500. First thing I want to say is the price action that's happening right now, it very much reminds me of 2022 in this vertical line. I'll just put in a box. This blue box, the price action is starting. More specifically, I'll zoom in here. If we compare February 2022 to March 2022 price data, we just recently had something similar, a crash, a rally attempt, a rejection below the 50 EMA or below the 20 EMA, and then we dump back down. So this reaction from top to bottom was about negative 10%. So if we fast forward to today, this is what I'm saying, is we had the dump, we had a bounce attempt up to the 20 EMA area, we had a bearish evening star candle pattern. The 20 EMA did not hold, we did not bounce, and therefore we're rejecting, plunging or dumping down in the market. We could go down 5 to 10% negative. So 546 is my downside target estimate based on just the last time we had a similar bearish event. 519 is the downside target. And let's see if that coincides with some pivots. Close to S5 pivot or S3 pivot, not exactly, but it's close. So I'll mark that on the charts. Now, in terms of where might I want to buy more, probably in this zone, I'm going to call it the A zone down here, or just put a circle, because usually the algorithms do not buy a lot until we have extreme oversold. So even if we look at the RSI, it's not extreme yet. Not extremely oversold. On the weekly as well, the hammer candle that I said 2 weeks ago actually failed and we're dumping down. We could dump all the way down to 523 or lower. If it's extremely bad, we could go down to 472 over time. It's not going to go down in 2 days, but maybe 6 months it could reach down there, right? If we just nonstop crash. So again, conservative outlook, conservative play is my strategy right now. I tried some aggressive trading. There was a little bit of a bounce, but the tariffs are just too overwhelming. So I'm giving you a lot of bearish outlook setups right now. The only way we can reverse into bullish, first, we need good news. We need good earnings next month. We need the tariffs to at least maybe slow down during the earnings and let the company data play out. However, it doesn't seem like that's going to happen. So the big line in the sand for me is 550. If we lose 550, then we're probably going to see some serious fear and capitulation. QQQ, Nasdaq. Remember last time I was saying we're basically range bound. We might test the reversion to the mean. Didn't quite get up to 500 because we didn't have bullish news. But this is Nasdaq. QQQ, same deal. Rejection below the 26 EMA, evening star bearish pattern. Doesn't seem like we're going to get this double bottom W because on the weekly chart, we're still rejecting down below 489. Not safe yet. Something that might actually make more sense for the bulls is Morningstar patterns. Basically, Morningstar patterns. So we have not had that yet. If this week was green, then it was probably going to be okay for another rally, but it's not happening right now. So that's what I'm watching out for. We will know when the weekly chart tells us there's a double bottom or a 200 EMA bounce or 100 EMA bounce. It's basically rejecting and trying to test that on the bottom side right now. So levels, before we move on, we could dump down another 5 to 10%, which is not good, but it's possible. 440 is downside target or 463. So for me, I'm kind of ignoring the technicals right now. This stochastic RSI on a daily was too high. This is forming, but usually we need a dump and then the bullish momentum will actually activate. So that's probably what's going to happen. Dow Jones getting rejected. This is all basically very similar, but we had a little more significant dump on Nasdaq than compared to Dow Jones. And we can see the lower side support of 408 is way down here. We could continue to keep dumping another 2% to 4% on the downside. And we could just use pivots to keep it real simple. Pivots 411, 400, and 390. On a weekly chart, we're losing the weekly pivot. That is not good. And if we dump down, we can hit 404 or 395 in the long term. IWM still in the death cross. This upside down head and shoulders failed basically and rejected. The tariff news was too bad. The bearish death cross. And we could see we're still in this larger term pattern. If you're a day trader, you know sometimes when we dump like this, you just have to back off. As a bull, as a long trader, I have to back off. Just back off and wait for extreme oversold conditions to even think about playing any type of bounce. Let's go to oil. Speed up a little bit rapid fire. Oil broke out of this symmetrical triangle, went to target, and now resting above the 200 EMA. So this could be good in terms of if we need to hold above $74. It looks like it wants to pull back a little bit, maybe even down to 73.75 and then try to make another leg up. Natural gas is oftentimes inversely correlated with the S&P 500, not always, but we rallied up first in February, started downtrending, hit the 50 EMA, and the warning sign was that we're bouncing off of this $20 level. And then once the market sells off, stock market, natural gas can have a rally. So it's still in the up cross. Natural gas and gold has been like the only two assets that's reliably predictable to keep going up. So this gap up on gold now at all-time highs, basically, in the past couple of years. And it's not in any intraday oversold area. And yes, I can see the bearish momentum's building, but sometimes I have to wait months for that. The last time this happened where you had an extension was about 23 days. We're about at that mark, 28 days. So see if this continues to go up. If we ever have a gap up outside of the Bollinger Band or the linear regression, so if we ever get to like 295 very quickly, then that could be a short spot. But right now, dips are the play on gold and also natural gas in general. Let's move on to crypto. Total, TOTAL, crypto market cap. We're still in this downtrend right now. It's not anywhere near reversal. Low, lower high, lower low, lower high, lower low, lower high still compared to the previous lower high, 3.1 trillion. Now, I can give bullish and bearish setups. Bullish setup first, potential upside down head and shoulders only if this 2.61 trillion level holds, and then we have a reversal in the entire of May, April and May. However, the bearish scenario now is we downtrend, correlate with the stock market, come down to about 2.47 trillion. And if we lose that, then there's going to be some serious crypto capitulation down here in April if we cannot get back up in the market right now. I'm saying that because I'm emphasizing that because if I bring in some SMAs, simple moving averages, and let's set that up for 50. Sometimes good to do this. Put on a 50 and put on a 200 SMA in big, bold font. And the death cross is almost there. It's so close. If we keep dumping, we're about to death cross on both SMAs and EMAs. So miners are probably really nervous right now. Something that can make whales nervous as well. The Morningstar pattern on the 50 EMA is failing, and we're not actually rallying yet. So it looks like it wants to dump down. The next large target would be 2.23 and 1.79 trillion. That would be a lot of red. We're getting rejected right below this pivot point. Something to watch out for. Bitcoin, very similar. And I'm not going to draw the exact same patterns, but we lost this horizontal structure, 13% to downside, which we've hit. Rejection below the 50 EMA. I do want to point out, though, that my initial trade of reversion to the mean was correct, but now it's time to take some profit, right? I got stopped out, but took my profit as well. So that's why I'm out of there. For crypto now, it's very important to just wait. We had this rising wedge pattern. Sometimes you have a dump. So if it dumps out, it could dump down to like 78 area, 78,000, and see if we hold that. Pull up a pivot point. The lowest pivot 74 and 64. So we're getting stuck actually below or around the 200 EMA. That's not good. It would be more bullish if we held that and started rallying again. So that's how I know. Yes, the same setup is possible with the upside down head and shoulders with the clear neckline at 88,000. But until we break above 88,000, bulls are still bears. Bears are still in control. The only good thing about Bitcoin is we did bounce off of that weekly pivot point of 80,000 and trying to hold that into the next month. Ethereum USD has been death crossed. There's too much on the screen. Has been death crossed since February 2025. Still in the downtrend. All I was saying last time is relative to the high, Ethereum is 50% off. But we know cryptos can crash 80 to 90% if it's a real crash. So where would that particular spot be? Let's go from 22 low to 25 high. We're hanging around the 618 level, which is 2,000 Ethereum, but it can continue to crash lower, even lower to the 1,600 to 1,200 zones. So if it ever gets down there, I'm interested because that's a longer term S1 and S2 pivot point zone. And that would be way outside the Bollinger Band. On the weekly chart, that would be very, very oversold on our side because we can see the weekly hasn't gotten oversold until that June 2022 low. So if this is going to be a mega crash, crypto actually has to crash more. XRP, we can see it's trying to have the upside down head and shoulders. So it looks like this lower 200 EMA of $1.97 is going to be our support level. It is still angling to the downside. And if I put some easy Fibonacci support levels, we're hanging around the 3, 362, sorry. 382 at 222, and then the 50%, and then the 618. 382. So I'm looking at XRP to be about 197. If it gets to about 192 or below there, I might buy. We need a little flash crash. I don't want crypto to crash completely, but to get a better feel, a better price. Because if I just buy now and it dumps on me, there's no point for me to buy that. I need to wait for this to dump out, and then using one of my oversold strategies, buy that dip and see if we get a little bit of a bounce. Best time to buy when it's low price. Solana is in a downtrend. Downtrend here in March 2025. Can you believe it? We went almost to $300 Solana almost. From that high to low, we're down negative 55%. And same thing with Ethereum. If we back this up all the way, low to high close zone, Fibonacci, the 618 is actually $100 Solana. And that sounds more reasonable, because if we cannot hold 125, 130, 116, it looks like $100 Solana could be the play. $65, $40. I'm just talking about value. I don't really want to buy Solana up here. This is a good example. If you just turn off all the drawings here, turn off all the indicators, look at the price in the white. We had a large double top. We literally hit the 2022 high, 21 high. And it's retracing down. We're holding a relative support level, 24 of July, support zone. If we don't hold this and bounce, we're dumping, most likely. This kind of happened before. The only thing I'm watching out for is if we see here in the price back in 2021, it looks like we're about here in this blue level. I'm marking it big because we had a crash, a bounce, and then a dump. We had a crash, a bounce attempt, and then a dump. And then if we get rejected below this, another larger dump. Finally, when it starts slowing down, then we could get a larger bounce. But trying to go long in a downtrend is very, very dangerous. Let's just end with Dogecoin because that's in the news. And I'll do one trade example. Dogecoin is in the down cross. We're still in a downtrend with the death cross on the EMAs. Low, high, low, high, low. Upside down head and shoulders area. And we had that small trade, and it went from oversold to overbought. Went from below the Bollinger Band to top of the Bollinger Band. So sometimes that's a strategy I could use, but I have to catch it in the waking hours when I'm awake. So I'm also anticipating this price to fall to about 13 cents. Like I said last time, if it gets to like 12 cents or 8 cents area, I'm interested because that's probably a oversold zone. Right now is not oversold zone. The only way we can survive here is we need to never drop below 16 cents. If we can hold that, then we might get a reaction to the upside, but we're already death crossed. Now, one example I want to show people is why is it bad to buy in downtrends if I'm a bull? Can't play every single dip. And this is why it's extremely dangerous. Turn off all of the indicators. Ethereum USD, because it's a smaller number. Let's do some replay trading to end this. So let's back up to, let's say, December 2024, when we're at maximum euphoria. I'm just going to buy one Ethereum. So let's just pretend that somebody's still bullish way back here in December 2024 because of all the news. Let's say because of quantums and AI and etc. Stock market was up at that time as well. So what happens when we buy a dip and it doesn't go up? Like now, let's just pretend whatever this price is, 3,414 example, somebody tries to buy this with a 10% stop loss. Let's do a 5% stop loss, for example, and the 10% take profit. And I'll buy 10 Ethereum as an example. And I bought 10, so put my stop loss 5% down, take profit 10% up. that sounds like I manage my risk correctly in this example. It sounds like I managed my risk correctly. But the more important question, the other side of the coin, the equal important half, is this a real setup? The answer is actually no. So let's fast forward, right? Immediately stopped out the next candle. Immediately have a unnecessary loss. And so the saying in Wall Street and in trading is we never want to catch a falling knife. What do falling knives look like? August 2024. When you just have red candle, it just means sell, 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 panic sell. We never want to try to catch those falling knives because unless I happen to buy an extreme, that's what I'm talking about in my previous analysis of the charts, is unless it's an extreme, there's no telling where the bottom is in this whole way down. That's why it's very important to try to not catch a falling knife. So if I have patience and just wait without indicators, right? Without indicators, wait for it to dump. If it bounces, it's okay. But I'm starting to see a larger head and shoulders here on this price. Left shoulder, head, right shoulder with a clear neckline, right? So 23% to downside is my target. 20% downside. So 20% is 2,541. 50% down would be 1,594. Let's see if these targets actually hit. Sometimes I want to also draw a trend line just in case it happens to bounce off the trend line, which it just did. So I'm getting ready for the next trade. So if we lose the neckline, I'm going to try to short. Okay, so this is me pre-planning a setup, right? Now somebody might be thinking, oh, it's going red, it's hitting the support level, I must buy green. And that could potentially be a mistake, right? And so to try to avoid that loss, just be very simple. And if we're going to dump, then just sell, right? Stop loss, take profit, like this. And, got rejected there, right? Market played me. So try one more time. There's the huge dump. Okay, so that was actually a little bit too early and my stop loss was a little bit too small. So probably have to open this up or do no stop loss for the next couple of trades. So let's see. Looks like I'm a little late to the short and we're below this area. Now I'm starting to see the price hesitate. So I'm going to try to go long here. And I'm not going to put a stop loss because I don't want to get auto kicked out like I just did. This would have been a correct short for me if I just didn't get kicked out. So let's try to go long again. Let it play out. I'll put a take profit though, if it happens to bounce up to 2955. There it is, right? And it happened on one day before it got dumped. So that's why sometimes it's not good to have a stop loss or take profit. Just, it's at least very important to have a trailing stop loss, but we don't have trailing stop losses here. Trailing stop losses are where the stop loss is a set percentage below the price. And if it goes up, it follows the price until the price stops. And then it locks that stop loss in. And when the price goes down, it sells. So I like take profits better, but right now, very few crypto exchanges have trailing stop losses. So this is an example where we're starting to downtrend and we hit a resistance point right on the dot and we got out. So you can see, you can feel it, that for me, trying to go long, trying to go green when we're downtrending is actually way harder, right? Trying to catch these little bounces, because anytime we hit a resistance, it's just going to reject down most of the time, right? So trying to get any little bit of green, I'm having to do tight stop losses, tight take profits, smaller position sizing, everything tighter right now and less risk because in America, it's harder to short crypto, for example, for now, compared to international exchanges. So this is all I'm saying is, sometimes when I'm a long bull, I need to exercise patience and discipline. If I'm an investor, I'm not playing these little trade bounces because I know from all my study and research, you just wait for the big dump to the bottom and then I'm going to buy that. But I'm trying to show people trading right now in this video. So let's try to we might be able to do one more trade. Let's see if we dump out and we can see we're starting to get outside this Bollinger Band a little bit, get a little bit of help from some indicators. We're rejecting down, pivots. Perhaps if we get down to about this 2000 level one more time, I might try to catch along. So we bounced off here and I'm just, for the sake of time, I'm going to pretend I just bought here. 10% stop loss, smaller position size. It might not go 20%, but let's just see what happens. So I'll buy. I'll do a pretend take profit up here. No stop loss on this paper trade because I'll do a mental stop loss if it crashes on me. There we go. So this is what I'm saying. If I had the stop loss, it would have kicked me out. Very important. Stop losses are extremely important. But for me, sometimes I'm not buying the exact top or bottom of a trade. So it's good practice. Sometimes I'm coming in like the middle of the trade, right? Would have got stopped out for sure. There we go. This win rate was not very good, 25%. So this is real in terms of trying to go long when we're in a downtrend. I wanted to show this to people that trying to buy green when we are downtrending in a bearish environment is not probably the play for trading because it's going down. So like I said last time, why am I trying to buy green when it's going down, when it's already downtrending? The trading is going to be a lot harder versus, let's rewind and go back to like September 2024. My last green Ethereum bullish call was when we saw this larger upside down head and shoulders in 2024, it's starting to reverse to the upside, right? You can see it's not going down anymore. It's actually going sideways. So now I'm interested. Now I'm interested. So for sake of time, let's just pretend I just bought randomly right here. It's not the perfect spot. And in this case, because there's a measurable pattern, we could do a measurable stop loss. So for example, let's commit to this stop loss, 10%, and take profit of 20%. And see if this actually works, right? It's not going down. That's the key. We're not crashing. It's not crashing. And then boom, right? This is a real trade that I had in real life. It's just one trade instead of trying to do 50 trades in here. And somebody probably, if they, unfortunately, if they didn't see the trend change, it was a short squeeze. Anybody who tried to short at this spot in October 2024 got kicked out of their trades, right? So let's fast forward here. And I want to end with this. It's sometimes not using any indicators at all and just understanding the basic trend of, okay, it's starting to uptrend. It's getting really high price. It's getting really high price. Oh, we had a nice dump. Okay, and now I'm, okay, double bottom. Excuse me, double top on the price. Double top. I'm saying this, double resistance. We hit this 4,000 area. Now in real life, I probably would have shorted this part or the break of here, but let's pretend I missed that. The next rejection, because we're starting to get in a bearish environment, is if we bounce up to this spot, 3,814, right? 3,814, maybe it might dump. If it keeps rallying, then I'm not going to short. But if it rejects down, I should short somewhere in this zone with this stop loss up here as such, right? So let's try to see if this is going to happen. Are we going to bounce? We're going to reject? Okay, we rejected. I missed it. I'm going 5 times speed right now. Let's just pretend though we sold it. And the stop loss, this is a really bad spot to short, but let's just pretend. I might have to put it above here. So extend out to get real targets. And I might bring this in a little bit just for demonstration purposes. This is only a 1-to-1 trade, however. Watching the price. There's the huge dump, right? So understanding that, yes, what I'm trying to really point out to people is that the trend of the price is extremely important. It's extremely important. If it's downtrending long term, most likely you want to try to short or sell or take profit at resistances. If we start consolidating and it starts going sideways, if the price holds above the low, I'm probably going to want to buy that green. And if we get a breakout, there's a last attempt, right? So if it starts going sideways, there's a chance at a reversal. So I want to start buying like it's Intel or Ethereum. However, if we get a double top and a resistance and then a rejection, meaning we don't go higher in the higher highs and we're losing momentum, and then you have a triple candle pattern, that's where I'm going to short. Resistance, rejections, resistance, resistance. Trying to buy oversold longs is extremely difficult because sometimes it doesn't even happen in my time zone. I'm sleeping when that happens. So the algorithms have the best chance, honestly. So rejection resistance is the name of the game. And if I'm a long right now, all I have to do is just wait. I don't have to play every single trade. Just wait for the price to hit the bottom whenever it hits the bottom. Yes, there's some bounces, but what's the overall trend? It was going down. So unless I'm trying to buy what I think is a relative bottom, long trading is much more difficult. I'm going against the trend. I'm going against the direction, right? So just having 2 trades of patience could have shorted more there. But you get my idea is that was the correct play. When a long setup appears, I go long. And the keyword is chart setup. When a bearish setup appears in point A or B, then I'm going to short. So right now, you can see we're not in an extreme bullish setup. It's just in the formations of that, early formations. That's why I keep saying every stream is if I'm very, very disciplined, this is not my buy signal. It's not a buy signal for me. Just wait. I'm just going to wait because we could get a further dump. Once we establish support, then I'm going to start buying. And if we get a trend change, then I'm definitely buying long. Right now, though, it's the early stages. Okay, everybody, thank you so much. And thanks for watching this long video. If you like this video, go ahead and click like, subscribe, leave a nice comment. And remember patience and discipline in this volatile environment. See you in the next video.